something unusual is happening in the world of agriculture. While the United States once dominated global corn exports, it's now watching new players step into the spotlight, and at the front of the pack, Canada. In 2025, Canadian corn exports are quietly gaining traction, expanding into new markets, forging trade deals, and taking advantage of opportunities the U.S. can no longer fully capture. Is this just a temporary shift, or the start of something bigger? For decades, the United States has been the world's top corn exporter, producing over 350 million tons annually and shipping massive volumes to Mexico, Japan, South Korea, and parts of Europe. This dominance wasn't just about volume. It was about logistics, subsidies, and trade deals. Buyers saw the U.S. as a reliable source, cheap, consistent, and always available. But that era of easy leadership is starting to crack. The cracks began with trade tensions, first during the Trump administration, then with lingering tariff disputes that haven't gone away. Some buyers, especially in Europe and parts of Asia, are now looking for alternatives. Tariffs on U.S. goods, combined with concerns over genetically modified corn, have made American exports less attractive in key markets. The result? Countries that once defaulted to American corn are now shopping around, and that's where Canada enters the picture. Canada has never been a corn superpower. Its output is a fraction of the U.S. total. But in recent years, Canadian exporters have been making smart moves. Thanks to trade agreements like CETA with the European Union and CPTPP with Pacific nations, Canadian corn now enters many global markets tariff-free. Unlike U.S. corn, which faces duties or political baggage, European buyers in particular are favoring Canada. They get non-GMO, high-quality corn from a politically stable country with clean trade terms. And it's paying off. Canadian corn exports to the EU and Asia have quietly increased, with new contracts signed in 2024 and 2025, particularly in sectors like animal feed and biofuels. While Canada's total volume is still small compared to the US, its growth rate is real and strategic. In some trade lanes, Canadian corn is now edging out US shipments. This isn't about scale, it's about smart positioning. So what does this mean for American farmers? Many are feeling squeezed. Prices are dropping, input costs are rising, and foreign buyers are less predictable. Fertilizer, fuel, and machinery costs have surged, cutting into already thin profit margins. Some farmers warn that international trade volatility is making it harder to plan and harder to stay afloat. Farm advocacy groups have sounded the alarm, urging Washington to stabilize relationships, revise trade deals, and restore trust in U.S. agricultural exports. But for now, many feel stuck, watching other nations like Canada capitalize on missed opportunities. Canada's rise in corn exports is part of a broader shift in global trade. Buyers want options, politically stable, environmentally conscious, and tariff-free when possible. Canada offers that, and with climate change reshaping where crops can grow, countries that adapt, with reliable supply chains and nimble diplomacy, will gain more ground. The U.S. still leads in output. But leadership in trade isn't just about who grows more, it's about who sells smarter. Canada isn't replacing the U.S. on the world stage, not yet, but it is carving out a role that's bigger than its size. By aligning its policies with buyer needs and staying clear of geopolitical friction, it's quietly reshaping how North American agriculture plays on the world market. For the U.S., the message is clear: adapt or fall behind. For Canada, it's a moment of validation, and maybe the beginning of a new chapter in global trade. What do you think? Is this just a temporary shift or a long-term trend? Let us know in the comments.